Hello, everyone. Welcome back to another episode of the Retail Tales, a podcast show where we exclusively discuss all things AI across the retail value chain. I'm Saurabh, and I'm your host for this podcast. In today's episode, I'm going to talk about an interesting article that CNN published a couple of weeks ago. The title of the article was "Customers Didn't Stop Spending, Companies Stopped Serving." I'll link the article in the episode description for the people who'd like to read it. But this article highlighted a shift in consumer spending behavior where people seem to be opting for better value rather than cutting back due to financial strain. For instance, instead of grabbing a Big Mac or a $7 latte, consumers, according to this article, are opting for a sit-down meal at Texas Roadhouse or a burrito from Chipotle, places where they feel like they're getting better value. Then this article gives another example of how the travel industry is also feeling a little bit of a slowdown, but that's largely because of the post-COVID surge in spending has pretty much tapered off. Remember all that pent-up demand to get out of the house? Well, according to this article, it's been mostly satisfied. And those pandemic savings are dwindling. So fewer people are booking pricey Airbnbs, especially with all those added fees that make hotels look like a better deal. And then there's Disney, the so-called happiest place on earth. Turns out it's not making everyone happy anymore, according to this article. Guests seem to be frustrated with the high costs, the overwhelming number of add-ons, and the complicated planning process. Some are even saying that the magic is gone. Ouch. I mean, if I were to summarize the whole article, it's a take that suggests people are much more value conscious now. They seem to be seeking more value, not necessarily spending less. When I read this article, it got me thinking, what does this mean for retail? Well, the article points out that while big brands are seeing a decline in sales, it's not necessarily because people are spending less overall. Instead, they're choosing where to spend more carefully. And I think the same could be applied for retail as well. It's no longer just about getting customers in the door. It's about providing the value, providing the experience that makes them want to return. Look, if you consider the past 3 years, US retail sales have shown a dynamic pattern influenced by economic recovery and inflation. In 2022, retail sales grew robustly, and it was pretty much driven by pent-up demand and accumulated savings from the pandemic period. But then, supply chain disruptions and rising inflation began to impact consumer spending patterns. By 2023, retail sales growth moderated, mainly because of persistent inflation and an increase in interest rates, which obviously made customers more price sensitive and led to a decline in discretionary spending. But essential goods, like groceries, maintained steady growth demand despite these economic pressures. And in 24, retail sales have exhibited, kind of mixed performance so far. There's been a decline in some categories of discretionary spend, while some others have seen an uptick. Inflation continues to play a significant role, with nominal sales figures sometimes masking the real volume of goods sold. Under all that, the shift towards online shopping has remained strong though. But some retailers have not been able to respond to this shift, as well as some of the other ones which invested heavily in their e-commerce business. And there's a similar trend for in-store sales as well, by the way, where some retailers have done quite well, while the market has seen some of the other ones flailing. Let's talk about an example. I'm not going to name the company, but it's a Fortune 500 retail store chain with I think more than 1,000 stores across the country. If you look at the current state of their stores, it's very disappointing. There is so much potential. There are so many opportunities which seem to have been squandered completely. I'm not sure if you visited this retail store in the last 6 months or a year or even, maybe 2 or 3 years. And if you haven't, there's a reason for it. And that reason is that this store chain seems to have stopped serving customers completely. Poorly managed stock levels, messy shelves and product placements, and a lack of adequate staff and staff training to assist customers. These are pretty much the biggest turnoffs for any customer. If you get that kind of an experience, why would you go to the store again? And if you go online, overcomplicated user experience, terrible search recommendations, and over-reliance on discounting and coupons. It's not surprising that they've lost more than 1 million shoppers over the last 5 years. And that they've seen their sales plunge by more than 1,300 basis points. 1,300 basis points. It's huge. Accepting Amazon returns in-store was seen as one of the biggest and the boldest moves in the history of this organization. And it could have very well been a masterstroke. But the reality is that it hasn't delivered for them. The other in-store issues seem to be countering the foot traffic generated from Amazon returns. Are they alone though? Absolutely not. There are so many such examples in the retail industry today. You could look at one of the biggest pharmacy chains in the country, or one of the biggest home improvement retailers, or even one of the Fortune 50 retailers out there. Similar story, similar state, similar results, and ultimately shrinking revenue growth. But what are some of the underlying problems, you may ask? Look, we are at the foothill of the retail earnings season, and you might see dwindling sales and a less than optimistic outlook for some of the historically biggest brands out there. You may also see some retail companies with dismal results blame it on external factors, like economy or inflation or geopolitical challenges. These factors have been the soft targets for retailers to cop out of their less than expected earnings report. But not many address the underlying shifts in consumer expectations and behaviors that are driving these results. And look, I'm not saying external factors don't play a role. They, in fact, most certainly do. What I'm saying, though, is that they should not be the sole focus of below par performance for a retailer. Instead, it's crucial for retailers to examine how effectively they're adapting to the evolving market dynamics and meeting the new demands of their customers. The failure to innovate and respond to these changes often reveals a deeper issue within the company's strategy and strategic execution. Retailers need to look beyond the surface and invest in technologies and practices that align with current consumer preferences to turn the tide of their performance. I mean, look at Abercrombie Fitch. What an absolute turnaround. From fast fashion malfunction and discriminatory lawsuits in the first half of the last decade to fastest growing retailer now. Do you know that this company's stock was growing faster than Nvidia's last year and this year? Isn't that crazy when 2023 was the year of generative AI? But it's true. Earlier this year, ANF posted north of $1 billion with a B in net sales, making it the best first quarter in the history of this company. Do you know the underlying reason? For the most part, it's that the company started listening to its customer base and then invested heavily in aging up. I was reading a report from Wall Street Journal, and according to that report, ANF broadened the age range and changed the lifestyle they were appealing to, removed their flashy logos, lowered their inventory levels, and pretty much moved away from its storefront-heavy strategy. Today, more than half of its sales happen online, and that was a deliberate move. I was talking to one of my friends who works at A&F and, leads their AI and data team. What she told me was that A&F is much, much more focused now on using AI to drive insights from how customers are interacting with them. She mentioned that they use AI to extensively track browsing and shopping patterns of their online customers and use that data to strengthen customer profiles. And they've started using generative AI to drive individualized communications to their customers, which are based on these strong customer profiles. Of course, there have been, many more such moves within the organization that resulted in this phenomenal turnaround. But what I learned is that AI and now generative AI, along with their focus on data, are at the center of this comeback. Now, look at the two examples that I just spoke about. Stark opposite in thinking, in their strategy, and in their execution. But what sets A&F apart is the willingness to take their challenges head on and seize growth opportunities with changing consumer preferences and disruptive tech like, AI and generative AI. Look, I think there are three systemic challenges in retail right now. The first one being shortage of workers, and especially frontline workers, who can provide a consistent service quality and enable excellent customer experiences for in-store customers. Frontline workers are under tremendous amount of pressure, but often lack the support and resources needed to deliver exceptional service. With high turnover rates, insufficient training, retailers really struggle to maintain a consistent level of service across their stores, and this inconsistency typically leads to negative customer experiences and a weakened brand reputation. The second systemic challenge is that supply chains are under increased amount of pressure. Global retailers, while they remain anchored on low cost and high speed, are increasingly focusing on supply chain resilience. Faster and more holistic decision making, ability to anticipate and respond to potential disruptions instead of reacting to them, and then investing in supply chain diversification to reduce their supply chain vulnerabilities. These are the main focus areas for most retailers. And then the third systemic challenge is the ever-changing nature of consumer preferences. And then, obviously, retailers' ability to respond to these evolving preferences with seamless online and in-store experiences. What makes this challenge even more of a problem for retailers is that they still use age-old ways to sense customer sentiments. Fragmented customer journeys don't help with that either. And to make matters even worse, the feedback their teams do collect is very often siloed and not used effectively to gain actionable insights, which then leads to a disconnect between what customers want and what retailers offer. And we all know what it means: missed opportunities and diminished customer loyalty. But you know what? These challenges are common for all retailers. No one is spared. It's what you do and how you execute in this challenging environment sets you apart from the rest. What A&F did to stage its phenomenal comeback is that they dug deep in data, leveraged AI to generate actionable insights, and then took actions on those insights. And the results are in front of you. At this point, I'm fairly confident. Some of you are thinking, well, it's easier said than done. And I'm completely with you on that. But in the same breath, I'll also say that doing starts with the first step. And the first step must be acknowledging the fact that AI can help you with these systemic challenges, followed by finding a proactive, experienced, and responsive leader to drive this AI journey for your organization. The rest, I can guarantee, will follow. All right, On my end, I promise I'll do an episode soon to highlight some of these most impactful and practical applications of AI and generative AI to counter these systemic challenges. I do think that topic and these opportunities deserve a dedicated episode of their own. But for this episode, let me leave you all with a thought. It's an idea which could prove to be a game changer if applied correctly. And the idea is to use AI and GenAI capabilities to listen to your customers. Listen to them on what's working and what's not. Get into the weeds of what customers are saying about you, what customers are telling you, what their sentiment is on social media, on online forums, in your stores, and what your own customer service teams are hearing. Listen to what they are expecting of your brand. Incentivize them if you have to, in order for them to share their feedback with you. Yes, you may hear more negative chatter than positive, but that chatter will give you a treasure trove of opportunities and drive actionable insights for you. And you know what the best part is? AI and GenAI capabilities are sophisticated and matured enough to help you do this. And on that note, it's a wrap on this episode. Thanks for listening. Here's me, Saurabh, signing off. If you like the content, don't forget to follow this show to keep learning a thing or two about retail AI. You can follow us on LinkedIn and subscribe to this show on Spotify or Apple. Join me in the next episode of The Retail Tales, a show which is exclusively focused on exploring all things AI across the retail value chain. Until then, stay safe, stay healthy, and stay curious.